Hi, and welcome to your weekly macro roundup. We talk macro, trying to make sense of markets that really don't make any sense, but more importantly, answer your questions so we can become better investors. I'm your host, Steven Van Metre, and thanks for joining me today in this special edition of the Macro Show, which I am dedicating to my wife, who is at home right now, both equally nervous and excited for today's episode because she only has a small idea of what is coming. Because in today's episode, you're going to learn who Dr. Purple is, what all those odd references in the videos are, and a bit of history about her past and what's gone on in the last couple years, in addition to the macro you're used to. Now, I am going to put a qualifier on today's episode. If you do not have an imagination or a sense of humor, today's episode probably won't be for you. However, if you're just here for the macro, fast forward a couple minutes. Well, I'm going to go through all the macro, go through the Q&A, and then we'll get into kind of the history of what's going on so you all can become part of our family and share in what is going on and be a part of all these references, because to my wife and I, you are part of our family, and so we wanted to share with you some of our history. Now, back by popular demand, thanks to you, Chris Dark had me back on his critically acclaimed podcast, Dr. Dark After Dark, who has been going on a massive run of just top-rated guest after guest. People won't say no to him. I mean, hey, that's pretty awesome. So he had me on last night. I will put the link to the show in the description. So if you're not familiar, under the video, there should be a little description. It might say read more or something. You click that. There'll be a link there. Check out some of the other podcasts if you're interested. I know he's got a couple great guests coming up in the next couple weeks that I'm really looking forward to. And I think the show is about an hour long. So, and it was better than our last one. So we're getting better. And Chris does say I am his most popular guest, which is pretty cool. Again, thanks to all of you. And for the first time in world history, we have, by popular demand, our first guest of the show, Dr. Purple. Say hi, buddy. Yeah, Dr. Purple is here today. Now, in case you're wondering, he doesn't normally wear his badge unless he's going to work, but he wanted you to see that he is a real doctor. I'll put it up here so you can see it. This is his Cedars-Sinai badge where it says Dr. Purple, world-class surgeon. Now, this cayenne stripe here is different depending on what badge and department you work in. Well, you get a different color, and his is for the neurosurgery department, and so he wanted you to see that. Again, he only wears it when he goes to work, but today he didn't think that you would believe that he was a doctor. No, he didn't really, no. He wasn't sure about that at all. So you're going to learn more about Dr. Purple and what's going on. Now, look, the show today is called Macro with Dr. Purple, not Dr. Purple does macro. You don't know macro. Now remember, our deal was, if you behave yourself this episode, I'll give you a carrot at the end of the show. Okay, so now that we've established that, let's get on to the macro. So this week's data, it's really going to be hard for me to keep a straight face this episode. Really, really difficult. Let's go back to Wednesday's data. I'm glad you're having fun because I am too. And look, you know what? If you can't have fun in life and you can't have fun with your spouse, I mean, what's all this for, right? I mean, trust me, she is rolling right now, and this is good. Hopefully it's cheering her up. And when you hear what she's been through, you'll understand. Into the Chinese data. Now, the problem with Chinese data is it's largely faked, and you believe the bad, and then you kind of are skeptical about the good. That's at least how I approach it. I never trust what they have to say. But the retail sales data in June on a year-over-year basis is still in contraction, and that's a surprise. I mean, if you look at retail sales out of China, I mean, this thing is just up, and up. And it makes sense because they have so many people that live in rural communities that this thing can easily be running at a 10% increase per year. And right now it's negative, showing that Chinese buyers are not coming to the stores. Now, some good news out of China. Industrial production on a year-over-year basis went from 4.4 to 4.8. So it kind of makes you appear that, hey, there's some sort of recovery going on there. But anytime you look at the data, you sometimes have to dig a little bit deeper to make sure that it is what you think it is. And at 4.8% in the United States, I mean, that's pretty strong data here. But in China, look at the trend, 4.8%. Yeah, isn't really even back to their normal trend of 6 from looking back to 2015, 2016, 2017, and so on. So this increase here, while a V-shaped recovery is not really back at its highs, from China's perspective, they need to see this go higher, but it is not quite as good. I'm not going to say it's bad. The problem, again, with data out of China is you just don't know what is real or what is not. Moving to the data of Thursday, what do we have? Some French CPI data slowed to 0.2% from 0.4 on a year-over-year basis. Moving on into the United States. Initial jobless claims higher than expected, 1.3 million. Now, one thing that's important to understand about initial jobless claims, this is not what they should be when there's a recovery. They should be 600,000 and less. I mean, you should see them falling down, dropping, not hovering around 1.3 to 1.5 a week. This is indicating there is no recovery in the jobless market going on here, bringing the 4-week moving average down to 1.375 million. Continuing jobless claims are fairly sticky, slowed to 17,338,000. Now, this does not include the pandemic unemployment assistance. So the total number, I think I mentioned last week, was around 32.9 million people are on unemployment claims. The problem is the pandemic numbers they're out there. They're not headline numbers. So we're still in the low 30 million people in America are receiving unemployment benefits of some form or another. And keep in mind, the last check for the $600 weekly bonus, or whatever you want to call it, goes out like the third week of this month for the last week. So I think it's paid in advance. And then a lot of the PPP loan money starts to dry up very early in August. So the question is without further stimulus that we're seeing, are these unemployment claims likely to go higher or lower? And as someone who studies macro, my view is they go higher. Obviously, I'm not here to tell you what macro does. As an investor, you need to form your own opinions, but you got to have all the data to do that. Moving into retail sales, on a year-over-year basis, retail sales jumped back to 1.1%. And let's look at this. The chart is fairly impressive here, because what you see in retail sales, which I don't know why this isn't a full chart, is nearly a recovery back to where we were running around 3 to mid 4s. And at 1.1, I mean, we're getting back up to where we were. Now, I'm very skeptical of this data, and I'll show you why. Not just because I'm skeptical in general, is because Cass freight index didn't budge. And look at retail sales went way back up on, pretty much back to advanced retail sales, including food and services, was back right where it was, as if nothing happened. So overall retail sales down to 1.1, but excluding food services, this is as if nothing changed. And you can see Cass Freight just ticked up slightly higher. So you either have to look at the retail sales data and say, all right, if that number is legitimate, which again, I'm skeptical, and I say that because the Redbook same-store weekly retail sales data is still in recessionary zone at minus 5.5% on a year-over-year basis. In fact, it's worse than it was in the great financial crisis, and that's with the recovery in the Redbook. So either stores, this number is legitimate and stores are drawing down their inventory because freight isn't increasing, or the number's bogus. I don't know. I mean, I just... Like I said, I'm having trouble believing that. Moving on to the Philly Fed. Now, the problem with these regional Fed data is not that they're diffusion indices where it's just looking at a month-over-month change, is they're all different. And I wish they would follow some sort of similar format. So the end of the story on the Philly Fed data is the manufacturing index improved, it's still improved. It was from 27.5, it slowed to 24.1, but it was still an improvement. So that is good as things get better in Philly. We could look at a graph of this, but it really won't tell anything because it is, again, a diffusion index. Let's move on to, Let's see, what do we have? The tick data. Normally I'm pretty interested in the tick data, but there's not much this week that I was overly interested in, because this just tells us the major foreign holders of Treasury securities. And we can look back in May, and we know from the bond market and Treasury yields, there wasn't really anything interesting going on in May. But we can look here and see that they increased, foreign holders of Treasury securities increased their holdings by a little over 50 billion, both an increase in T-bills, but more of the increase in long-term notes and bonds. So again, nothing worth going and digging into the data like we could look back at March and see, hey, look at what happened. So, but they're still buying Treasury securities despite claims otherwise. Into the Eurozone CPI on a year-over-year basis in June increased from 0.1 to 0.3%. Again, just kind of following along with the rest of the world that there is a slight uptick in inflation. And then in today's data, building permits missed expectations in June, but still rose 2.1% over the month. Housing starts surged higher at 17.3%, beating expectations due to lower mortgage rates, which is interesting. The home builders are very bullish, with 30-some million people on unemployment claims, that they're going to be buying homes pretty soon. I don't get it. But nevertheless, new home construction is headed higher. The University of Michigan Consumer Sentiment Survey, the preliminary data for July, shows that consumer sentiment is headed lower, current conditions. So this is what consumers think of today. That is also lower. And expectations, this is the future, pretty decent drop there. So their outlook in the future is weaker, and inflation expectations both in the present and the 5-year ticked slightly higher as consumers start to think there's inflation coming. Fortunately for them, they don't have much to worry about because there isn't inflation coming. Let's take a look at the H.8, the assets and liabilities at all commercial banks. Probably one of the most important data sources you can look at on a weekly basis. After all, we're in a debt-based economy, and the economy expands as the debt expands. So you want to look at the data to find out what's really going on. And this tells you if the debt is growing, if people are out there borrowing, this is where it's going to show up, and it does it on a weekly basis. So if someone's telling you the economy is booming and you don't see it here, then you know. And if they say, no, the economy is getting worse, and you see that, the debt starting to expand, you go, well, maybe they don't know. So let's go take a look at this. And believe me, this comes out at 1:15 p.m. Pacific, and I'm literally clicking refresh on the screen. That's how interested I am in this. Securities and bank credit rose by, looks like about $8 billion. Not a big number as we've seen in the recent weeks, with mortgage-backed securities rising about $3 billion. Treasury and agency securities. So these are getting the rows off here. Treasury and agency securities rose by $3 billion, with mortgage-backed securities taking quite a drop here of looks like about $11 billion. Perhaps, and I have a small opinion on this, is without a lot of residential real estate loan growth, perhaps due to the Fed's purchase of mortgage-backed securities, it could be that there isn't a lot out there on the market for commercial banks to get their hands on. So this drop in this number, it doesn't completely shock me. I don't know why, but I just have perhaps that small theory is there just aren't enough new mortgages coming on the market to keep the banks buying these. We'll see. And it could be that maybe they're comfortable around, this 2.2 1-ish X number, 2.2 number, they're 2.22 number. They're pretty close to hovering around that number and been staying very consistent in their holdings. Treasury securities, however, surged by $14 billion, as again, investors around the world think owning treasuries is foolish. Meanwhile, the large commercial banks continue to buy more treasury securities than the Fed is buying. So you have the Fed buying every week, and you have commercial banks buying every week. And then we have non-government insured mortgage-backed securities. They increased, and non-MBS securities, they were effectively flat. Let's go ahead and look at all loans and leases at all commercial banks. Look, when there's a purple rabbit in in the bottom right of your or left of your eye. It does make the show more interesting. It's hard not to laugh and focus. And I'm trying to focus on the data, but it's funny. He's sitting here. So $2 billion drop in loans and leases. So we kind of have this start to slow down. And we see commercial industrial lending drop about $6 billion as this turns negative. Finally, we see residential real estate pop by 10 billion. So perhaps there was a bunch of loans that in the pipeline that have finally gone through. And believe me, the residential real estate loan market is very, very critical. The scary thing is we're seeing very little growth despite record low interest rates. How about, oh, no, that wasn't residential. That was total real estate. So here, residential, went up. It looks like, I guess 10 billion because commercial real estate didn't do anything. Consumer loans, I don't know why I'm having trouble seeing these rows. Consumer loans up 3 billion, and pretty much all of that was due to credit cards. So there you go, no real change anywhere else. So at least consumers are spending at the week ending July 8th, and we know that was leading into, that was a holiday week, so perhaps consumers were out spending the first of the month. Maybe that's a sign of something more to come. I'm not really sure at this point. I don't think so, but we'll see. Let's jump over into the PowerPoints. We've got the, I meant to have these charts ready. The M2 money supply increased slightly on a year-over-year basis, flat on a 6-month rate of change, and is falling on a 3-month rate of change. So let me go quickly pull up the charts if I can get to the right tab on my browser, and we'll bring you back over there. So here's my Fed charts, and where's the M2? And I'm going to want the monetary base too. Again, if you're wondering, if you're new to the show, these are recorded live without editing. I generally don't believe in editing. It makes it more fun and more challenging at the same time, but you get to see when I make mistakes. So looking at the M2, we notice that institutional money funds are dropping as money flows back into the equity market, and we'll take a look at that here too. Where is the money growth coming from? Savings deposits. So you're seeing consumers saving money. Why might they be doing that? Well, pretty simple. A lot of the stimulus money is going to be gone pretty soon. Looking at institutional money funds, we're seeing it start to head down, which normally implies money's flowing back into risk assets. Now, we've seen that before back here in October of 2008 before it shot up. So the question you have to ask as an investor is this now the peak? Is this the end of the recession where this is headed lower, or is this a false move like we see here back in 2008, and there's going to be another move higher of money into cash? You've watched this show for more than a couple weeks. My opinion is this is headed higher, but it does not surprise me that money is moving out of, couldn't see any of that, could you? Sorry. I thought I was on the wrong, wow. See, told you, there's no editing. All right, here we go. There's the institutional money fund data right there. You can see it's hooking lower. I think it goes higher. Coming back to the release table, as you see here, savings deposits are rising. Institutional money flow is falling. And that, to me, is pretty interesting. All right, let's back to the PowerPoints. Monetary base is down. Remember, this is updated every 2 weeks, even though the Fed claims it's a weekly data source. 4.772 trillion. What is that? Why is that dropping? It's simply due to the fact that a lot of the repo loans have been paid off, and a lot of currency swap lines are being paid back. The Fed is still easing, so that number will head back higher. And let's go take a look, and I'm going to make sure we get there this time, at the monetary base data. And what are we looking for here in the H.3 data is we want to look at total balances maintained. This is QE, and we see that due to those things being paid back, there is a monetary base coming down, the balances of the Fed. This will head back up because, again, the Fed's still committed at the moment to a 120 billion floor per month of QE, and so far there's been no changes to that. So that will head back higher. All right, let's get back to the PowerPoints, which if you can do the math, that means the money multiplier should have gone up. It did slightly to 3.88%. There is your reason why we're seeing inflation in the short term is the money multiplier. The question you have to ask yourself is the M2 going to continue to rise as all of the stimulus money starts to dry up and consumers are going to have to start repaying their bills at some point? Or is it going to continue to rise? And then what's going to happen with the monetary base? Well, this answer is really simple. The money multiplier is going to head lower. Again, because the $600 weekly checks are going away, that means incomes are going to be lower than they were before. Money's going to come out of savings to pay those bills. Something that no one's really talking about is, there's a lot of loans that have been put in forbearance. There's over 100 million loans, not dollars, 100 million loans that are put into some form of forbearance. Now, what would that be? Mortgages, cars, credit cards, commercial loans, student loans. And what other type of loans that are out there that could be put in forbearance? Now, what we do know, and I don't know this for a fact of all government-insured mortgages, but my understanding is government-insured mortgages, those payments in deferment can go to the end of the loan. Now, if you have a jumbo mortgage, guess what? You're going to get a lump sum bill for that 6 months of deferment. I don't know how credit cards are going to handle it. I don't know how all these other loans are going to handle it. But here's the bottom line is people are going to have to start making payments on these loans in the next couple months, because if they went in deferment in March, do the math. That means the next couple months, these payments are due. They're going to have less income because the unemployment insurance is going away. Or the extra unemployment insurance is going away. The PPP loan money is drying up, suggesting that people could be hitting the unemployment line. So that makes sense to me that money is being saved. That money is going to need to go to pay bills. Now, another thing that I brought up on Chris Dark's show that I have not heard anyone talking about, and if they have, it's when you do your own research, one of the things that I think is important is to kind of have a little bit of tunnel vision, selectively, listen to certain people, try to form your own opinions, and then go out and listen to what other people have to say. We know a lot of people were taking their stimulus checks and buying stocks because companies like Schwab and TD Ameritrade and whatnot report massive increases in online account openings. Now, what's going to happen inside these families, right? These bills are going to start to come back now. They're going to have their savings. Do you think there's going to be a conversation at the dinner table between a husband and wife that says, well, we're going to have to pay these bills. Why don't you go cash out the stocks that you bought because let's hang on to the savings? Now, imagine if a lot of people start selling their stocks to pay on their bills coming up. What's that going to do for the stock market, which is virtually entirely being propped up by the retail market? Retail investor. Someone who's not hired a financial advisor, someone who's doing it themselves, because corporate share buybacks are way down. I saw a chart and I meant to save it for you. The corporate share buybacks, which was the bid under the market for the last 10 years, is pretty much gone. There's some there, but it's no, we're talking something that was way up here to way down here. So the market's being propped up by retail, which normally happens at the peak of every market. What happens when they need to sell to pay their bills? And if you think that's not going to happen, it will. So in my view, the money multiplier will at some point roll down, especially when the Fed queues up that next big round of quantitative easing, which I expect to come. And why is that coming? Because interest rates are too high. Real estate loan growth, now big, $10 billion move over last week, bringing the growth rate up to 4.13% a year ago. So we're finally back over 4 as interest rates are at all-time lows. So you have all-time low interest rates and mediocre real estate growth. Look at the 6-month rate of change. It ticked up a little bit, but the 3-month rate of change is effectively at 0, went from slightly negative to 0.15. It's telling you that rates aren't low enough. They're not low enough. Commercial industrial lending growth rate on a year-over-year basis down to about 20.5%. 6-month rate of change at 20 and falling. 3-month rate of change is negative at 2.68%. Again, what is it telling you? Interest rates are too high. How about loans and leases at bank credit? On all commercial banks, flat at 7.71% from a year ago. 6-month rate of change is flat. 3-month rate of change is negative. That is synonymous with a recession. How about credit card loan growth rate? It is also flat at 7.53%. So again, consumers are out spending, but they're not charging, at least not enough. So again, no sign of recovery is telling you interest rates are indeed too high. Now, one thing I wanted to look at, and I will add it to the list of things I was not prepared for that just occurred to me that I wanted to show you, and then we'll take a look at I want to go through and look at some charts, and I've got some great questions for you this week. or for this week today. We had some great questions this week. All right, over to the New York Fed website. Let's take a look at markets and policy implementation, monetary policy, Treasury securities, Treasury operations schedule. We'll click on schedule and inevitably there, oh, hey, it actually popped up. Sometimes it doesn't. So here we have Monday, which is going to be here, the 20th. We have a 20 to 30 year Treasury coupon QE auction. So the long-term bond. And then we have Tuesday, Wednesday, Thursday, another long-term bond auction. And then next Monday, when we get the announcement of the next schedule, a long-term bond purchase. So the Fed is pretty focused. Look at this. We have coupon, tips, coupons. And you notice there's no bills here because the Fed is buying notes and bonds. They're trying to do what to midterm and long-term interest rates. Dr. Purple, you want to weigh in on this, bud? All right, there. Dr. Purple, he says yields go down. And hey, he's a world-class surgeon. He knows interest rates. Not really. He doesn't know. Doesn't really. All he cares about is interest rate on his S-Class Mercedes lease. And yeah, I know that's a sore subject. That's a very sore subject. We'll talk about that right now. Okay, so the Fed's balance. This is a great chart, and I saw this on Twitter. This is one of the reasons I love FinTwit and all the people that post on there. Even the ones that irritate me sometimes by things they say, I love them because they post great content. And this is a Fed balance sheet versus the MOVE index. Now, what's the MOVE index? If you've never heard of that, it is the VIX version of the bond market. When a lot of people tell me that, hey, interest rates aren't going lower, you don't know what you're talking about, all that fun stuff, it's charts like this, and I'm like, oh man, I've got to show you. This is so cool. So right now, bond volatility, and I'll see if we can make this a little bit bigger, in purple is, yes, purple, we got it, is at an extremely low level. And you'll notice, and this is something I've said before, when the Fed cranks up its balance sheet, see in this kind of orangish tan line, what happens to bond volatility is shoots up. And when bond volatility shoots up, do you know where bond prices go? They go, and interest rates go down. This is why I keep saying, if you look at the credit data and you see there's no growth and interest rates are too high, the economy is essentially grinding to a halt. It means the Fed's going to have to do more QE and going to have to do a lot of it. And that's how I know the bond trade pays off. This is how I know I'm right. I've known this for a long time. I just don't have the ability to chart the move. It doesn't show up on anything that I have. And let's see if you can... Oh, I think I made it bigger, but it's actually not showing up on your screen. Anyways, I'm sorry about that. So here's the move. Here's the Fed balance sheet. So the next big surge higher in the Fed's balance sheet brings with it bond volatility, brings bond prices higher, equity prices lower, and interest rates lower. And that, to me, is super, super cool. All right, let me clear those off the screen. Let's go take a look at some charts, and we'll stick kind of with our theme of these videos being over 30 minutes to hit some questions, and then we'll get into the story of Dr. Purple. All right, so here's the S&P 500. It's sticking to that rising trend line as bulls need this to go higher. This is not a traditional topping or bottoming pattern. This is not what you want to see. Normally, bottoming patterns involved a double bottom or a triple bottom or a head and shoulders bottom or something else. So bulls are fighting this rising trend line. So from the moment, equities look bullish. How about we go and take a look at treasury yields? 30-year treasury yields are virtually nowhere different than they were back in early April. And the 30-year yield got pushed back a little bit today, but it really isn't anywhere different than it was back in late March, early April either. The 30-year broke its rising trend line. Kind of looks like what the S&P is headed up, right? Notice the difference? Not much, right? And what happened? It broke through, went lower, and now it's finding another little consolidation pattern that we can see much more visibly in TLT, which is effectively the inverse of 30-year treasury yields. And we can see that here's a consolidation pattern. Let's go back again to this descending triangle pattern that we can see the similar pattern here. And what happened? It broke out of this descending triangle pattern and then it started consolidating. If you drew some lines here, you can see it was making another triangle pattern right back at the second peak here. And what's happening right now? We have a consolidation pattern right at the second peak. And what happened before? It broke out and made new all-time highs. And we're still in a bull market for bonds. We're just in a major consolidation pattern before it moves higher. So the charts are telling us what the economic data is, that rates are too high. The Fed's going to have to do more QE. But right now, for the most part, this zone, where I've got all these lines, is a sell zone. Down here is a buy zone. How do we know that? Because sellers have been selling up in this range and buyers have been buying down here. So sellers need to defend this level. Let's take a look at today's price action. And it came back down and retouched this support level just over 1.3%. These lines are not exactly where they need to be, but they're pretty close. And that tells us that I expect to see bond prices rising into next week. We break out over this top solid purple line, and we're off to the races. And that comes much sooner than you think, because what is the Fed doing? Buying notes and bonds. What are these? Bonds. Pretty cool, right? People get this don't fight the Fed backwards. You want to do what the Fed is doing. If the Fed buying bonds, you want to buy bonds. You don't want to go out and buy equities. You might be right in the short term, but in the long term, you're in the wrong side of that market. Let's keep rolling with this. How about the dollar? The dollar is finding support here. A lot of people on Fin Twitter talking about how this spells the end of the dollar. We're going to see a big inflationary pulse. I don't think so, but it might. Right now, it looks like a potential double bottom. If this holds, the dollar is going to holler and head much, much higher. Some interesting topping patterns that we want to also keep in mind is the energy sector is got this little topping pattern here. And remember, the XLE is mostly ExxonMobil and Chevron, suggesting that this is going to head lower. We found out now that schools in at least California are going to be distance learning the first semester or first quarter or whatever system they're on these days. It always changes, so I can't keep track of it. Nevertheless, what that tells you is there's going to be fewer people on the road than are normally on the road when school goes back in session, because we're in the critical driving season at a point where both product and crude builds are above their 5-year average. So this does not spell good for the energy sector. How about financial stocks, which usually trade opposite treasury yields? Again, showing a topping pattern here, pretty much inverse of what we see on treasury yields, suggesting that as financial stocks are sitting in this sell zone, that a break of here is going to head back to their recent lows, which is not as low as they can go. So keep that in mind. I think the banks are going to be in bigger trouble than the market is acting. But if you look at the banks and their desire to add treasury securities, they know something is coming. A couple other quick stocks. We'll take a look at PG&E. It's got a very interesting trend line here. People wanted to buy PG&E right here around $10 a share. They thought this is a long-term buy. And well, that long-term buy is right where it is. Look at this topping pattern here, suggesting that PG&E is a zero or near zero stock when this big pattern breaks down. How about General Electric? You could draw a line here and say GE stock is also headed down. People thought this was a buy. No, this is a mini topping pattern, also suggesting that GE stocks headed lower. How about AT&T? I mean, probably almost, I would say most people in this country own something or have in their life from AT&T. Look at this topping pattern going back to 2002. It says all these people were sellers up here. Probably a lot of smart money drove it down here, became buyers, sold, bought and sold, and they probably cleared out their inventory, because you can see where they've been selling right here in this $38 to $40 some range, and it breaks below, say, roughly $28, $29 a share. It's telling you AT&T is going way, way down, and that is probably not good. So you see a lot of these kind of trends in the market. You can look at Apple, this rising kind of trend line like the S&P. You see if this breaks down, what is it going to lead to? Likely selling across the board. And you can see these similar patterns. So right now we have a market that is both bullish for equities and both bullish for bonds, and only one's going to be right. And you can guess what I think is going to happen is, you got it, stocks down, yields down, and that's how I think things play out. All right, let's get into your questions. Got a few of them here that I'd like to get through. Love the show and want to submit a question for the Q&A vids. Sweet, thanks. You mentioned that QE is deflationary. It is. Does this imply reduced liquidity in the markets? No. Look, okay, kind of. All QEs is a swap of reserves, right? You take Treasury securities with an average maturity of 7 years, you swap it with cash that cannot come out of the Federal Reserve banking system. So how does this reduce liquidity? Well, how would a bank get liquidity? After a QE swap, can the Fed or can the commercial bank do anything with the cash in the Federal Reserve Bank? The answer is no. Now, when the bank holds a Treasury security, how can they create liquidity? They could sell it and raise cash. They could sell the bond, raise cash. So what is the Fed doing with QE? And see, everybody gets this so wrong about, QE causes rates to rise. No, it doesn't, because when the Fed takes those bonds and notes and bills out of the bank's hands, guess what? They can't sell them. And if you can't sell them, they can't drive interest rates up. Think about it. If financial conditions were so great right now and really improving, guess what? The banks would be dumping their Treasury securities to raise cash for loans. So what the Fed is doing is, again, pushing rates lower. That's what they're up to. And look at the auction flow. It's very, very clear. If so, why do we constantly finance professionals say that equity markets have been rallying due to an abundance of liquidity in the markets? Why? Because the Fed is acting as if QE adds liquidity. And the Fed knows it doesn't do that. They know for a fact it doesn't do it. But people believe it. And see, that's what our monetary system is. It's based on belief. And if you believe QE does something because you don't know it does something else, and you do it and everyone else goes and does it. When I was a kid, they said, well, if your friend jumped off a cliff, would you? Well, yeah, if your friends bought stocks, would you? That's kind of how it works. It's often mentioned that investors are buying stocks because there's no better alternative. Well, there is a better alternative. It's the bond market. The bond market's always an alternative. There's always alternatives. What exactly does Fed adding liquidity to the markets mean, and how, if at all, does the Fed add liquidity to the markets? Thank you and keep it up. Hey, you're welcome. And no, the Fed has no ability to add liquidity to the markets. Now, arguably, they're doing it through their corporate bond and high yield bond purchase program, but they're not really adding liquidity to the market as much as they're trying to absorb some of the debt issuance from the pandemic. So no, the Fed can't add liquidity. If they could, we would see things would be a lot different. Hi from Singapore. Hey, I did some research on my own. These questions came to mind. I think I could use your expertise. I'm happy to lend it. I understand the concept of why lower interest rates are deflationary in the long term. I'm, however, thinking about the short-term inflationary effects caused by lower interest rates. If yields were to fall, wouldn't this result in inflation in the coming months rather than deflation? Bingo, you got it. So this is why I say that QE is not inflationary until it is, because once interest rates are low enough to do what? Spur lending demand, which we see none of, so we know that rates are too high right now because they're not creating growth. Once they are low enough to create growth, then you do get a burst of inflation. Now, depending on how much growth you get from those low rates will determine how long the inflationary pulse lasts. Once it's done, then you're back to deflation again, because low interest rates are inherently deflationary. Secondly, I'm not extremely sure, but I've seen bits and pieces of information about the Fed buying securities such as mortgage-backed securities under QE from institutional fund managers. Or am I wrong? Now, the rest of this person's question is about if they're right, and they are not. That is not true. The Fed buys their mortgage-backed securities from the large commercial banks. It's only people they buy from. So it's not institutional fund managers at all. So to the person who sent this question in, if you want to do a follow-up now that you kind of know that, please feel free to do that. All right, next. Hope you're doing well. I am. I hope you are too. I've been watching your views and found it both informative and insightful. That's pretty cool. Thank you for what you do in helping us navigate the market. Yeah, and that's great. I appreciate that, because all I do is kind of just, it's like a riverboat ride through Disneyland. I just point things out. How you invest based on this is up to you, but hopefully you find it informative. Questions. You mentioned the bank would acquire treasury bonds to fund lending such as a mortgage. How does that work? Wouldn't both treasury bonds and mortgages go on the asset side of the bank's balance sheet? Yes, they would. My understanding is banks would resell the mortgage as they MB up to free up funds, but does that have anything to do with the treasury bonds? Yeah, banks are required to hold collateral. What's the best collateral you can get? Cash? Well, what pays more interest than cash that you can liquidate to cash in the deepest, most liquid market in the world? That's treasuries. So yeah, they gotta hold collateral. Also in the previous video, you said banks have no choice but to sell treasury securities to the Fed as part of QE. How so? Is this because banks can flip these securities to the Fed for a profit, or do banks need it to fulfill their reserve requirements? Many thanks in advance and many welcomes to you, my friend. So here's the deal. The large commercial banks are a member of the Federal Reserve banking system. Federal Reserve is the daddy. The banks are the kids. When daddy says you're going to do something because daddy has the legal right, thanks to the Federal Reserve Act of 1937, are you going to say, no, I don't want to do that? Wrong answer. You're going to say, okay. Now, you as a large commercial bank are going to want to make a profit on this because, well, why not try to? So the large commercial banks do know how to make a profit on it. They buy up the bonds, push interest rates lower, right? Bond prices higher, and then they flip it to the Fed after they buy them when bond prices rise for a profit. They have no choice. They have to buy them. All right, and last question, and then we get into the Dr. Purple story. Appreciate you sharing your work. Would you talk some more about the US dollar and why you expect a stronger dollar? You said, that's real simple. There is a global shortage of dollars, especially in the foreign market, and there is a record amount of US dollar denominated debt. So you got a lot of debt that needs dollars to be paid and not a lot of dollars to pay it on. That is why I believe and remain bullish on the dollar. You said you expect the dollar to rise along with the price of 30-year bonds. Why are these two correlated, and why is this important? I've been seeing a lot of experts lately worried about a falling dollar. See, I've been seeing the opposite. I've been seeing people excited about it because they believe inflation is coming. Thank you. You're very welcome. So the answer to that question is simple. What does a rising dollar tell you about financial conditions? Well, if a dollar is rising, it implies financial conditions are tightening. A weakening, right? Because it's deflationary. And what does a weakening dollar tell you? It tells you financial conditions are easing. Why? Because a weaker dollar is inflationary. All right? So a weak dollar is deflationary. Now let's go to treasuries. When treasury yields rise, it's a sign of inflation. When treasury yields fall, it's a sign of deflation. So what happens if you simultaneously had a rising dollar that's tightening financial conditions, signaling deflation, and falling treasury yields, which is signaling tight financial conditions and deflation? What do you have? An insolvency event, a liquidity event. You have things go boom. All right, and we do actually have questions for Dr. Purple of all things coming up. Now, if you don't want to hear about the Dr. Purple story, then the video is done for you. Now, let's talk about my buddy here, Dr. Purple. And if you're wondering, and you see in the video right there where my finger is, that's the briefcase he showed up to work today in. All right, so the Dr. Purple shows up in our life a couple years ago. A little more than that. My wife will remember more specifically when they showed up. And we have 6 rabbits about the size of him, all different colors. We have one that's 3 feet tall, called Blue Giant, and we have a whole bunch of little ones. And while the little ones generally do not have anything more than names, these bigger ones, they have names, personalities, likes, dislikes. Some of them have jobs. Even they have stories. One of them unfortunately speaks. That it was an unintended consequence. Now, why did all of this stuff happen? So now when you understand I make rabbit jokes or doctor jokes, now you kind of get where that's coming from. So why does all this matter? All right. Well, my wife was born with a twisted and curved spine. And don't worry, I'm not going to put up x-rays or pictures. I know some of you are cool with that, but I know some of you aren't, so we're not going to do that. She was born with a twisted and curved spine, and her back is a gigantic mess. And unfortunately, the solution was, before we met, to put her on a lot of opioids to deal with the pain from the back. And unintentionally, when you're on opioids, you become addicted to them. Now, she wasn't, out in the alleyways, getting drugs. She had, what the doctors gave her, and that was that. And in 2018, her body was starting to shut down. She was effectively dying. We didn't know that, but she was dying. And her body, like I said, her body was shutting down. And she had been consulting with a surgeon, Dr. Perry, down at Cedars-Sinai. And they were not checking her whole back because my wife didn't tell them about her whole back, unfortunately. And so there was a problem in her neck and she needed a neck fusion. And so on the day of the surgery, at that time, I think we had 3 rabbits, and Dr. Purple, poor guy, the other 2 are kind of married-ish. I think they're dating. We're not really sure. But he was kind of the lone guy by himself, and he was having a little bit of an identity crisis, but yeah. And he wanted to be a doctor. And so in pre-op, there I am, with Dr. Purple, and he didn't have his badge at the time, and I was keeping my wife distracted, who hates surgery. And I'm not saying people like, man, I can't wait to have a surgery. Look, she is just it's really scary for her. And so I was trying to distract her, because when you go into surgery, you do not want to be amped up or tensed up or blood pressure up. That doesn't help the doctors at all. And my wife's surgeon comes in and she's like, who is this? I'm like, it was Dr. Purple. She clicked immediately with what was going on. And I said, yeah, he wants a hairnet. She went and got him a hairnet. He was very excited about that, by the way. If you're wondering why he speaks by shaking. So if you hear me say shaking, that's how he communicates. He shakes. Now, you don't speak shaker, but I do. My wife still is working on it. She doesn't speak shaker. And he actually did go into the OR with her and did the surgery, right, buddy? Yeah, see, they didn't know you were a surgeon. And so that kind of began the story of Dr. Purple being Dr. Purple. And after that, he would come to all the doctor's appointments, and and we would generally bring the other ones with us. So we would go so then, she needed another surgery, because this is the point where we find out that her back is twisted and curved and is bad. And to get that solved, she needed an 8.5 hour long surgery where they would cut her open from her stomach, and then they fix that, just do whatever they did in there, flip her over, and then literally like a lobster, I kid you not, the scar literally from the top of her neck all the way down her back. And then that whole surgery was 8.5 hours long that she would end up having. And that surgery is really scary, because one, she could have died because you're messing with the spine, so death is the possible outcome. 2, she could have become paralyzed, because even if things go right, things can go wrong. So she could have become paralyzed and be worse. The alternative was that she would be on opioids, the rest of her life, and her life it was very clear that at some point in not too distant future, she'd become bedridden, and that was that. And that was okay. I gave her the choice. If you want to do it, we could do it. If you don't, you don't have to. It's totally up to you. And so she decided to do that. Now, building into the narrative of the rabbits and why I did this is I continued to build their story, and we continued to accumulate them. We have a lot of them now. And like I said, they have names, personalities, behavior traits. So I was building the world. I want you to see this from a macro perspective. I was building this world around them, because I knew the surgery was going to be bad. And I don't think any of us knew how bad it was going to be. So the day of the surgery, my wife and I were there. Dr. Purple was there. Her parents were there. And I think I had there were 4 other rabbits with us at the time. And so I go into pre-op with Dr. Purple, because that's what doctor does, right? You got to be in pre-op. And in comes, now you got to understand that at this point, the staff at Cedars in the neurosurgery department, they know what's going on. They know who Dr. Purple is. He's been to the meetings, appointments. They know exactly what's going on. They're 100% on board with what I'm doing. Like, they totally get it. So they come in there, and I'm immediately like, hey, Dr. Purple needs a hairnet. And so, yeah. So they go and get him a hairnet, and he's all excited. He's getting her distracted, to the point where the anesthesiologist all just comes up and wants to start telling her things. I'm just like, give her the injection while she's not paying attention. Just, look, we know what we're doing. Just do what you need to do while she's, distracted. And I'm great at doing that for her. So then all of a sudden, her surgeon comes and goes through the stuff and says, all right, Dr. Purple, it's time to go scrub in, and which he calls bath time. And he doesn't like that. But nevertheless, off he goes to to scrub in. I mean, it just builds this whole world, right? Okay, and it's going to make sense of why I did in a little bit. So, of course, I come back from pre-op. My in-laws were like, where's Dr. Purple? I said, he's in surgery. They actually thought I was loony, and you probably do too. But nevertheless, he actually truthfully was in the OR. And how awesome is that? And when Dr. Perry came out from the surgery, of course, he's tired out. She's holding him, and she hands me to him. And, of course, we're like, how did it go, right? And she says, he did great. We pretty much just assisted him the whole time. I mean, it's just so awesome, And then I went into post-op and I saw my wife laying there with this incision. I was like, whoa, this is bad. And not bad that, the surgery helped her. She lived and it made her better. But she had titanium rods installed 10 levels up her back from her hips. And if you saw the x-rays, I mean, the screws in her hips are huge. I mean, and you could see the screws all the way up her back and the hardware. I mean, it's wow. And so I'm looking at her, she's, obviously in pain, and I'm looking at this going like, all right, things are going to get very real very soon. Now, part of what you don't know yet is going to the surgery, we started tapering her off these drugs because we needed to. And unfortunately, the hospital staff did screw this up a bit, and she ended up started withdrawing from the drugs and having withdrawal symptoms while she was in the hospital recovering. And I want you to understand how bad this situation was. I mean, not only did she have this 8.5-hour surgery, she grew 2 inches because her spine was that messed up that she actually grew 2 inches. So she had a new body coming out of this thing, right? She couldn't walk and was being, when you're going to be forced to walk, she was withdrawing from drugs. Things were just a mess. And it was just for her. I mean, the rest of us, it was messy, but, hey, we're there to help her out and do what we can. And of course, Dr. Purple and the other rabbits were there. And, I would go around the hospital because we were there obviously for, this is not an overnight visit. And while I was waiting for surgery, I pulled I had a suitcase that I carried like a duffel bag, and I pulled all the rabbits out. And the volunteer staff, which is quite a few seaters, came around and they started asking questions like, what's with the rabbits? So I told them the story, and they thought it was great. And next thing you know, I was known all around this hospital as a guy with the rabbits. And if I would take them, some people would wave, the staff would wave, point at me. And to the extent where I actually was invited to come meet with the head of volunteer services, and he wanted, his staff wanted me to share with him about the rabbits. And this is when I learned from him that what I was doing was called non-therapy therapy. And I thought, well, that's pretty cool. I don't know anything about this stuff. So now we go home. My wife is in bad shape. Physically, obviously she's being forced to get up and walk out of bed, get out of bed when she can. I mean, it's very, minimally, she's pretty much bedridden now, withdrawing from drugs. And if you don't understand what opioid withdrawal is, and I understand that I knew this was a problem, but it's one of those things until you know someone that's going through it or you're going through it, it's a whole different ball game. I mean, not even close. This is when I realized like how bad things really were for her, not only physically, but also mentally. And my wife got lost in this. And I kind of had a hunch that this was going to happen. And part of the reason why I built this rabbit world for her was because who she is up here withdrew massively, to the extent that at least in the 6 months following, even as long as 9 months after the surgery, she didn't know who she was. And I don't mean she didn't know her name or didn't know, her kids or her life. She didn't know who she was. And if you can't relate to what I'm saying, I really can't say it any differently. She didn't know who she was. And all I knew is when I looked at her physically, yes, that is my wife 2 inches taller. I didn't know who she was either. All I knew and I had to hope for was that she was in there somewhere. Now, to give you an explanation of what that's like, ironically, we now have a pet rabbit. And when a rabbit is scared, it will go into its burrow. And then once, after a while, if it feels the threat is past or it's not sure, what it will do is it'll stick its nose out the burrow, not the whole head, just its nose, and it'll sniff around and try to smell to see if that predator's there or that problem is there that scared it. If it's not, then it'll start to come out. If it is, it goes back in the burrow. So and some of the stuff now, my wife does not actually know probably or remember any of this happening, but when she was so I would go to work, her daughter would come and stay during the day, that she knew. And nights were the absolute worst. This is where the withdrawal symptoms were at their absolute max. It was terrible. And what I would do when she was laying there and I was trying to keep her calm is I would frame this whole rabbit world for her. I would tell them where they're at, what they're doing, and I would tell her, go escape there, go there. They won't hurt you. You're safe there. Go there and stay there and wait. And they will be there. They will protect you. And I kept telling her that. She doesn't probably remember any of this. I would tell her over and over. And when I would come home from work, I would never ask her how her day was or how she was feeling. I didn't need to. I already knew. Because you don't heal from any of this. I mean, you don't heal from addiction fast. And you don't heal from the surgery fast. So I already knew. But I would come home and I would ask her what the rabbits did. I was always like, what do they do today? What were they up to? And of course, her situation was bad. And when I say bad, I can't even define. The word bad is even worse than it sounds. It was that bad. So I would come home from work every day and I would make up, of course I had a lot of things to do around the house and I had to take care of her, but I would make up new things that the rabbits were doing. I would continue the story. So think of this as a never-ending story, and I was doing it to hopefully keep her tied to the real world. Now, what do I mean by that? If you've ever seen the movie Inception, and if you're not familiar with the movie, the idea is these, I guess, criminals, if you were, they apprehend somebody that they need some information from, so say a code to a safe, for example, and they get them into a dream state, and with their technology, they actually go into the dream, build a world that the person thinks is real, and maybe they go up to the safe and put the combination in, and they open it, and the thieves get the code, and then in the real world, they go and steal whatever's in the safe. And to keep their connection to the real world, they have little markers or things that they spin or tops or whatever they do to say, if this does it in the real, if I spin this thing and it moves a certain direction, then I know I'm in a dream state or the real state. And I was trying to use the rabbits as an anchor for her. Does that kind of make sense? And I was hoping, because 6 months go by, and now mind you, the story of the rabbits is growing every day. You're becoming part of the story, and they had to become real to the extent that we would go down to her doctor's appointments, but we'd have to stay in a hotel the night before to make the whole thing easier for her. The rabbits went with us. I mean, there they are on the hotel cart. With the 3-foot tall guy, he goes with us. I mean, I actually had valets, that knew the story, that when I was checking out, they would come and I'd say, hey, he sits in that seat, but hey, you got to buckle him up because I don't want to get a ticket. They would buckle him up. I mean, people love this. We go to the hospital and she'd be, dealing with this, but a kid would see the rabbit and who maybe a kid that was scared of what they were going in that day for, and they'd see the rabbit and they would smile. And, that was what was cool, is the more I told the story, the more real it became. Now, my wife would continue saying that she didn't know who she was. Back to the rabbit in the burrow story. Well, one day I started noticing, kind of like a carrot coming out of the ground, I noticed some green shoots of her coming back. Now, she didn't think this. She didn't know this. She didn't believe it. And I didn't say anything, because the last thing you want to do when a rabbit's trying to come out of its burrow is you don't want to scare her, even if it's like, oh, hey, come here. No. It's scared. Even good things can scare it. So I just said, yeah, okay. I mean, we'll get through this. I mean, we'll figure out who you're gonna be. I would just go along with whatever it was, knowing. And then she'd leave the room, and I'd be like, she doesn't know. I kind of chuckle, hey, it's working. She's coming back. Well, because of the rabbits, because of Dr. Purple, and because she wanted to be back, it's now been 1.5 years since her surgery. I can't tell you what percentage of her is back. All I can say is way more than maybe either of us thought is back. And it's pretty exciting that, this little guy here plays a big role in all of that, along with the other cast of characters that we have around our house. And like I said, the way I made the story real was by sharing it. And we even took him on vacation. We ended up going on a cruise, and we took him with us. And we had a new one that showed up. He's, 6 inches tall, and enough to fit in my coat pocket. So he would go out with us to the shows, or if we go to a bar, and he'd sit him out there, and people would come up and they would ask about it. And it gave my wife an opportunity to tell the story. And by talking about it, of course, it all helps mentally. So Now you know in the videos why I make certain references. I do it to make her laugh. And one of the great things, and I could say this to someone who's been married multiple times, guys, if you're trying to figure out what's the right girl for you, marry the girl that thinks you're funny. Because I'll tell you what, if you have a marriage that's based on laughter, instead of like fighting and distrust and all that, it's going to be really good most of the time. And when things are bad, you're going to be able to laugh your way out of them, right? I mean, think about it. No one goes home from a comedy show angry, right? I mean, it doesn't work that way. And so we have a lot of fun. And I try to build that into these videos for her every once in a while, because I actually do know she'll watch them and laugh. And now you can laugh with us because you're a part of the story now. And it makes the rabbits and everything even bigger than they were. That's right, buddy. Yes, you're going to be world famous now, huh? Yeah, I don't know if this video is going to get a lot of views because of you. All right, well, he says it is. So with that, we're now at an hour and way over time, but I hope you enjoyed the story, and I want to thank you for being part of our family and being part of our life. And if you want to say something to my wife, just so you know, she does post in the comments. She is there, so say hi to her. And now you know the story of Dr. Purple. I'm Steven Van Metre. I hope you have a great weekend, and I look forward. Oh, wait, we got the Dr. Purple questions. Dr. Purple, what is your favorite and least favorite part of surgery? Keep shaking, buddy. All right, favorite part of surgery? Oh, he likes the cutting, power tools, sawing, drilling. Yeah, he likes all that. Oh, he also likes the fact that he gets a free salad bar visit with every surgery. Yeah, but your contract specifically states the patient has to live. Well, you signed it. Least favorite part. Oh, he hates the bath before the surgery. He hates that. He said he's very clean and he doesn't need that. Next question. Do you have any hobbies or cool collections? Thank you. You're my favorite rabbit. Oh yeah, he likes that a lot. He does have it's a collection mostly in his mind. He collects sharp objects. And lately, when my wife's been going to the grocery store, she finds he's been wanting a battle axe for some reason. And so he writes on there, battle axe large, why he wants a large one, not a small. We don't even know, but he likes sharp, pointy objects for whatever strange reason he does. Last question is, what is your favorite holiday? You're the best. You can operate on me anytime. No, that you really don't want that at all. No, you don't. Favorite holiday? That would be Halloween. And yes, he does have a costume. Yeah, he's a mummy for Halloween. Yeah, second favorite holiday, that would be Christmas. That's when he met his girlfriend, Greenie. And yes, if you can imagine, she is green. I'm Steve Van Metre. Thanks for watching. I'll see you Monday. Bye now. The content of this video is provided as educational information only. It's not intended to provide investment and other advice. This material is not to be construed as a recommendation or solicitation by or selling security, financial instrument, or to participate in a particular trading strategy. This video was prepared by Steven Van Metre, a person capacity, opinions expressed in this video that are my own and do not reflect the view of Atlas Financial Advisors Inc. or Steven Van Metre or Financial or Dr. Purple.